Folks, welcome to Members Stock Chart Request. This is where we review the symbols that our members submit for me to review on video. Let's kick things off with Facebook. This is for fellow member Anthony, and he's wondering, is it time to buy or short Facebook? As it stands right now, I would do neither because we do not yet have a confirmation breakdown on Facebook. But before we get to the analysis of Facebook, I've been concerned about Facebook for quite some time now, and most recently I did some analysis on Stock Charts Today, which I post on YouTube each morning, and this is what I had to say on March the 15th. Bidding up shares. Next chart up, Facebook. I saw some technical analysis done by Carter Worth on CNBC. I have a lot of respect for Carter Worth. He's a good technician. I have been saying for quite some time that the failure of Facebook to break out of this trading range is a major concern. Carter accurately pointed out that we have broken down below the lower band of the rising uptrend channel. We are retesting the lower band of what was support is now resistance. And if we break this lower band of support here in green, it's all over for Facebook. So that's from Stock Charts Today, March the 15th. If you want to just visit my website in the morning, or if you have a YouTube account, just subscribe to my channel. Facebook, I mentioned that if it broke down below this green line here, that in all probability it was all over for Facebook. And there's a very good chance that it is. But the problems for Facebook began a couple of months ago when it broke out here back in October. And we consolidated. It seemed like forever, and the markets were in fuego, yet Facebook just couldn't gather the steam to rally. So that's a concern. It was lagging the overall market. And that's when it first appeared on my radar screen as a potential short, but way too soon to go shorting it. We needed a break. Today may have been that break. Now you can see that on a weekly basis, we're putting in lower highs and lower lows. So we had the RSI, which has been telling us since November that there's something wrong here. Stochastics, the same thing. And whenever I see the Stokes trading down below the 50 level, I always teach members that rallies fade. Rallies fade. And what happened the week of February the 26th? We rallied. The rally faded. Yes, we bounced back. But what's happened since? We faded once again. Now we are rolling over once again. And if we break down below this prior low and we make a new weekly low, especially after the Fed meeting, it's all over for a while. And if we get a breakdown below 167.18 and we close there on a weekly basis, it's done. It's a short all day long. Members will be looking to short Facebook on any break. But what happens if the Fed meeting goes well and they come out with a dovish tone and stocks rebound? We'll look to buy Facebook as a long when it closes back above resistance. Not until then. As it stands right now, the probability of Facebook breaking down further is very, very high. The probability of us retesting this support level is extremely high. Why? It's because we had broken out, and now we have broken back down below a prior breakout point. That is a breakout point failure or a bull trap. When you get this type of price action, on volume no less, the probability of you seeing the lower band of support, again, is very, very high. The probability of it breaking is also very high. So Facebook is purely a watch. I wouldn't do anything right now with these shares until after the Federal Reserve meeting, and whichever direction Facebook takes with the market, I would go in that direction. But it must either A, break down below support for me to get short, or B, recapture resistance for me to get long. One of the two. But it must do one or the other. So until then, sit on your hands, display patience. I wasn't born with patience. It is a learned behavior on my part. But if you master it, it's very profitable. Lululemon, weekly chart. We've been watching Lululemon for quite some time. I've been waiting for the breakout above this upper band of resistance. We attempted it about 3 weeks ago. No go. We are pulling back in an orderly fashion. I think we're breaking out fairly soon, especially if we get a Federal Reserve press conference and announcement that is somewhat dovish. Because if it's not, I don't want to own any stocks unless they put me short of an index. So other than the weekly chart, I see no other reason to do any analysis on Lululemon until we rally and close above 83.98. The GDX weekly chart, despite the words of Larry Kudlow, who I happen to like, but he has no business giving financial advice, his downgrade of gold and his upgrade of the U.S. dollar, no harm really done net. We're holding weekly support on the GDX. We are currently long of a leveraged ETF, putting us long of the gold miners. I wouldn't be a buyer at current of the GDX, nor will I in the future, but I will add more to our leveraged gold mining ETF on a breakout, very similar chart, above this upper band of resistance on both a daily and a weekly basis. Because really, what's your risk reward? You have a lot of reward to the upside, but very little risk. Because if you break down below, let's call it 2082, give yourself some room, 2072, you want to be out of these shares. You don't want to be long. So the minute that you get in, you have a clear and defined stop just below. So the weekly chart is like a coiled spring. Daily chart, what we're looking for here, we have a little bit of a cup with handle formation on RSI. We need a breakout. Stokes, I drew this little blue line here. I hope you appreciate my artwork. What we need here is a hook up and a breakout above resistance, and both lines on Stokes trading above 50. We have already broken out on the daily chart. We broke out on the 6th. We have since pulled back. Bullish reversal day today. Folks, I think that we're heading higher. So I plan on adding more members. I will be sending out an alert. More to come. Google, another FANG name. Google has broken back down into its rising uptrend channel. It went parabolic, rolled over, broke back down, gained some footing, rallied, put in a lower high, and broke back down yet again into this trading range. I don't think that the worst is over yet for Google. The same social activism that Twitter and Facebook are guilty of, I think Google is as well, and they're putting themselves in jeopardy of regulation. Also, you have the EU trying to tax Google, Amazon, all the FANG names. They want their cut. So would I go shorting Google now? No. But I wouldn't go buying it either. So it's Monday, 4 trading days left to go. We are rolling over on RSI. Stokes are threatening to roll over. Now, if Google breaks down below this lower band of the rising uptrend channel, then you have a confirmation breakdown on a close below 997. Why? It's because it would have put in a double top, a lower high, prior high being 1198. We peaked out here at about 1175. We haven't broken down to new lows, but we do have a lower high. Now we're looking for lower lows. Once you start getting that, your downtrend is then in place. The path of least resistance then changes from up to down. We're not there yet. Members, more to come on our trade strategies and how we plan on trading the Federal Reserve meeting. I posted Market Wrap for members on the website. Members, if you haven't checked it out yet, please go check it out. And we're talking strategy. Everybody have a profitable week, and I will talk to you soon. Be well.